Most traders draw their trend lines, but 99% of them are wrong. Do you ever wonder why your chart looks clean, your trend line seems to be perfect, but somehow you keep losing money? Well, here are a few things you need to know, and those are the things that I'm going to be uncovering in this video. So stick around and let me blow your mind in the next 10 minutes. You see, trend lines are not what you are told they are. In fact, as a matter of fact, they are a key level. And just like every other key level, it is important to pay attention to three major things: the price action at that area, what price is intending to do, and the overall direction of the market when it comes to using the trend line. You see, what you've been told severally is to wait for prices to reach a trend line, connect the wicks of a trend line, and expect the bounce of that trend line in order for you to make a trade. But that has been the wrong thing all along. And if you stick to the end of this video with me, I would be uncovering and showing you how to utilize your trend lines and increase your winning percentage using trend lines as a beginner trader. If this is the first time you're coming across my page, the name is Rion, and welcome to the Rion Can Trade FX zone. And here we teach people how to trade, teach them myths and how to uncover myths, and also explode your trading strategy from 0 to 100. And please do me a favor, hit that like button, hit the subscribe button, and don't forget to also hit on that post notification bell so that you get alerts when new videos are up and running for you to watch and learn from. And let's head to the chart, guys.
Yeah, so guys, in order for us to fully break down and understand how these trend lines are supposed to work, the first thing that we need to pay attention to is, first of all, the strength of the trend line, the touch of the trend line, and to also identify false breakout or true breakouts, the retest of the trend line. Then when we talk about risk and targets, now these are like the major things I'm going to be paying attention in, and that is going to change completely how you use your trend lines. You see, in the past, you were taught that when prices get to a trend line and bounces off, so you're taught to connect wicks and all of these things to identify trend line, which somehow can be true or can be wrong at the same time. Okay, so you want to be very careful and pay attention to those things. Now, a trend line basically is a line connecting. I believe we all know this, but it's just to go over it for those who might not know it. Okay, so a trend line is basically a level, a diagonal level connecting the structural points of a trend, okay, or a structure. So in a bullish structure, we expect to make higher highs and higher lows. So a bullish trend line is supposed to connect the higher lows, which is the support levels pushing prices to the upside. Whereas on the bearish trend line, you're supposed to connect the lower highs, which are the resistance points, pushing prices to the downside, okay, for a bearish structure. Okay, now with that being said, we most times have been taught that we are supposed to connect, we're supposed to draw our trend lines and take the trades off the bounce of the trend line, which is wrong. You're also taught to connect just the wicks of the trend line, which are the lowest points, and that also is wrong. Now, this is something you also need to pay attention to. A trend line is just like every other key level, a support and a resistance level. One of the major things that are important for it as well is the number of touches. You see, if the touch is strong enough, if you have 1, 2 touch, it means that, oh, that trend line is strong. So you want to take advantage of the second and of the fourth touch. The fifth touch sometimes cannot be guaranteed due to the fact that that strength of that trend line has been tested a couple number of times, and that in turn could make it become a weaker level, because too much knock on a glass at the end of the day can't break it, but a few touches to a glass doesn't break it. So you want to have that same mentality. Now, the touch of the trend line, or to draw the trend line, are you supposed to be drawing your trend line based off wicks, or are you supposed to be taking your trade based off a bounce, which is wrong? You're not supposed to be doing that. You're supposed to be paying attention to price action candles. In fact, when you want to draw your trend line, you just don't want to draw your trend line based off the wicks, because sometimes wicks are only fake outs, okay, and only sweep of liquidities in the market. So you want to focus more on the candlestick, because that gives you a true definition of the present timing and longevity of buyers or sellers at that particular price or time. Then also, when it comes to fake breakouts and true breakouts, we need to view them through valid structural points. Okay, so we just don't want to say, okay, prices have broken out. You also want to identify that the structure is, you want to identify that the structure is bullish first. So bullish structure, So in order for us to know if it's a fake breakout or a true breakout, we don't just want prices to break the trend line and then we start saying, oh, it's a true breakout. We want to make sure that prices does break the trend line, but also invalidates the previous structural low for a bullish structure and the previous structural high when it's a bearish trend. Because at the end of the day, the only way structure really shifts from a bullish to a bearish structure is if we invalidate the previous key, okay, key structural low, which is this. This is the key structure here. Okay, that's how you identify the breakouts. Now, that's how you know if it's a true breakout or a false breakout. Now, how do you catch the trend? Okay, how do you catch the retest of the trend line? Are we just taking the retest of the trend line? Not really. We want to make sure that the trend line does come in line and in pattern with a key level. So you want to look for a previous resistance level or a previous support level that comes hand in hand or comes into a confluence with the trend line. So let's take, for instance, we have these highs here. If we draw these highs to this level here and we draw these highs to this level here, we see that these highs have acted as a previous support here and now can also act as a resistance level, and it also matches with what the trend line. So this gives us confluence. So we create a confluence as to the retest. Now, do we just jump into the trade without any reason? No, we also need to find what, like I said, we also need to find price action candles. We need to find the price action candles, not just a touch. So you want to probably go to like a lower time frame, assuming this trend line was on a 15 minutes time frame. You want to go probably to like the 5 minutes time frame and find some sort of, price action, reversal price action candle formation here, or you want to get like a shooting star, whatever the case may be, not just any kind of touch. Okay, and then you take the trade. Similarly, it also applies to taking a trade off the trend line. Okay, so for the risk and the target, I'm using this now for this line chart now, just for like clear example, and then we head to the charts. Okay, for the what do you call it, for the bounce of the trend line, you don't just want to take a bounce off the trend line. Okay, we want to take a trade based off confirmation and confluence. So as much as this trend line is connecting, we also want to make sure that this trend line is in confluence with a horizontal support or resistance level as well. And we just don't want to take a weak rejection, but rather we want to wait for a formation of a reversal candlestick pattern off the trend line first. Okay, and when we want to take the trade and we want to risk, we want to take the trade off the trend line and make sure that we are setting our risk below the previous key structural level, which is this level, for instance. Okay, meaning that we are saying that if for any reason prices should break below this level, it means that prices would then be invalidating a key level, which could be then signifying us to be moving into a bearish market, and we do not want that. So we want to confirm first the price action at this level, then we make our entry, and then we can then set our stop losses just under the last key level. So just in case prices chooses to want to manipulate this level, create a false breakout, we would still be in the trade and eventually continue to take the trade to the upside and not hit our stop loss. But if you put your stop loss directly under here, then you're going to keep hitting stop losses, and you then eventually get stressed out, leave the trade, and end up jumping out of the trade. Okay, so we want to pay more attention to price action when it comes to any kind of level. So let's head to the chart, guys, and so you see what exactly it looks like on the chart, and we'd analyze it on the chart and use the trend line and all of those things. If you're still watching to this point and you're still following and this is starting to make sense to you, please leave a thumbs up, hit that subscribe button, and leave a comment section in anywhere you do not understand anything, and I'll be sure to explain it to you and probably give you a redirection link to any of my previous videos that talks about trend lines, and you can learn better, more in a more detailed format on everything you need to know about trend lines if you're new to it. So let's get straight into the candlestick chart. Okay, so guys, this is Euro USD. Okay, on the daily time frame, we're going to be using the period of April 2024 up until the period of August 2024. Okay, so let me just mark that out. So we have this bullish trend line here. We have this bullish trend line that I can identify here from April of 2024 up until August of 2024. Now, what I want you to notice here about this trend line here is you see that when prices came from this trend line, it came from where? It came all the way from October of 2023 and acted as a trend, as a good trend line from October. Prices came back to touch it in April of 2024, and then prices came back to it in June of 2024. But there's something that I want you to notice. So this is the first touch. So let's not pay too much attention to the first touch here. Let's pay attention to the second touch, which was the second time that prices did actually come back to this trend line. And now I'm going to zoom in so you see. You see, it's not just the bounce, but it's the candlestick price action that happens at this level. Now, if you look well at the trend line, prices did come into the trend line a bit here and then pushed to the higher, started to push prices up. But we didn't get that full confirmation, not until the first one, two, three candlesticks formed at this level. And why was that the confirmation? We see that we had this huge bullish engulfing candle here, just right after the first and second touch of the trend line, which was then what? Signifying that the buyer momentum has moved into the market. And that's like the major thing you need to know, because this is a bullish trend line. So everything you're looking for has to align with the bullish side. And what did this then, evolve into becoming? It then shows that we had then created what candlestick formation here? A morning star candlestick pattern. A morning star candlestick pattern is a bullish reversal pattern. So remember, the trend line is supposed to return prices to the upside. And then now we are seeing what? A bullish reversal candlestick pattern. And that gives us more confluence as to what to take the trade. Now we can create more confluence and then place a trade on this trend line after prices pulled back down a bit, and then we can have our stop loss just right under a very good structural low, which was this point here. Okay, we see prices at this point here. This was the last structural low, and then set our stop loss here, and then now we can target higher to where the last previous structural high was at this very, very good point here. And that is how you use, the trend line. Now, prices did, in fact, return back to this trend line again. And now, if we already took probably like 3 returns here, and prices came back to the trend line. Now, if you wanted to make another entry on this trend line, you also need to do what? Study the candlestick pattern at that level. Okay, so this is how you take trades off a trend line, not just off the bounce. Okay, now let's look at when it is a break. Okay, now here is an example of a good break. Here we see that at October 2024 we finally had a break of that trend line. So prices did bounce off the trend line before the break happened. But now, was this a false break or was this a true break? The only reason why this became a true break rather was because it did what? It had taken out the last structural low at this point here. So this made it a true break. And just right after this break here, we saw prices doing what? Starting to sell off to the downside. So this became a true break of what? Of this trend line. And that is how you identify a true break. A false break would look something more like a wick and a return back to the upside of the trend line. Okay, so this is a true break. We took out the last structural low. Now, mind you, what else did we say we're going to look at? A fake breakout, a true breakout, the retest of the trend line. Now, in order for us to look for the retest of the trend line, okay, for instance, this trend line didn't give a proper retest. But if we were to get a proper retest, we would need to see prices do what? We would need to see prices pull back, okay, after this break, something like this, and then pull all the way back to the trend line. Now, how do we identify that it is a good retest of the trend line? We would have needed to see that what prices came into the trend line, but with a good confluence, meaning that we need to see that a support or a resistance level aligning with that trend line. Take for instance, this was where the break of the trend line happened. This is still the trend line, but now we have a what? We have a support area at this level, support, and now we need to make this support become a resistance. So now there's a confluence and a case study where support needs to become resistance, which also aligns with the basic rule of what? Of drawing your support and your resistance, where we say when support is broken, support needs to become resistance to what? To solidify and prove that it is now a good level to sell from. So similarly, if this is a support level, this is a support level, when prices comes back into the trend line, it needs to align to build the confluence so that you then have what? A good reason to sell off. And similarly, we would need to look for what? A good price action setup, candlestick setup here before we take the trade. And we can then take our trade here and do what? Put our stop loss just above the last good structural low. And that is how you would have executed a sell trade on this if prices had returned to the trend line. Okay, now last but not the least in this conversation is going to be for me how you identify the strength of a trend line. Now, in order for you to get a good trend line and the strength of a trend line, you want to focus more on trend lines that are not clogged. They are not, prices are not touching this trend line like every hour, or you need like some sort of space. Okay, you need the trend line to act based off a longer period of time. Now, why this is so is the longer time it takes for prices to come back to a trend line shows that it needs to, momentum slows down for a while before coming to the trend line. Okay, momentum slows down for a while before coming to the trend line, and then it means that if that momentum slows down, obviously the next side of the trend line would need to peak. You understand? We need to pick up from that point. But if prices is touching a trend line, for instance, something like something of this nature, prices is going, you have a trend line, prices is going 1, 2, 1, 2, 1, 2. It makes it faster for what that trend line to get broken, because too many touches or test of the trend line weakens it and is eventually going to break it. But if we say this prices touch this trend line, probably let's say on Monday, and then prices came back to the trend line on Thursday, and then the third touch you probably would catch or you're experiencing is prices coming back to that trend line after, let's say, maybe a week. It shows you that this bullish move that happened before the return is a good bullish move, and this is a retracement. And by the time prices come back to the trend line, the strength of the sellers would have been weakening out, and you start to see a slow in momentum and some sort of consolidation. You find the price action, and then you can finally take the trade and expect a new high. Because the more tests the trend line has, the weaker it gets. If it has 1 or 2 tests, 3 tests, it means it's still strong. But anything 4, 5, you should be skeptical about it. And that is how you actually use your trend lines the proper way. And I hope with this video, it opens your eye to, experiment and try out these methods I've taught you on your trend line, and see how it changes your view on trend lines and how you start to use your trend lines even better. And until the next video, I'll see you guys on Ryan Can Trade FX Zone. And remember, if you're yet to hit that subscribe button, please do that. Give this video a thumbs up and leave a comment if this video helped you, and if it helped you open your eyes to things that you never knew when it came to trend line. I'll see you guys in the next episode. And as always, it's Ryan for a reason, baby. Cheers, guys.